Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
Hi, everyone. Welcome to the Bloomberg Businessweek Weekend podcast. Another week where it was a given that we would talk tariffs, the U.S.-China relationship, Fed independence, job security for Jay Powell, along with a big dose of earnings and, yes, market volatility.
And so that's all ahead. As this hour, we dig into the quarterly updates of two companies, talking supply chains, consumer sentiment, and the reality of manufacturing with the CEO of Whirlpool Corporation, Mark Bitzer.
And then it was also a big week for Tesla as it reported disappointing but not entirely unexpected results and getting Elon Musk's presence on the call with analysts to announce his soon-to-come actual presence back at, or at least is paying more attention to, the company he runs. We will hear from one well-known investor who owns Teslas and has at times been a buyer and seller of company shares.
All that to come. We begin with the U.S.-China trade war. President Trump signaling an exit ramp may be in sight for those sweeping tariffs he's placed on Chinese goods. The president said Wednesday that, quote, everything's active when asked if he was engaging with China, and that Beijing was, quote, going to do fine once talks had settled. Meantime, U.S. Treasury Secretary Scott Bessent warned negotiations could take up to 3 years.
This situation felt really fluid, and there was a lot of back and forth throughout the week, which is what really kept investors on their toes and markets volatile. Highly recommend that you check out the Bloomberg and Bloomberg.com because all of this stuff, as we know, it feels like every day there was a whole new batch of headlines, especially when it comes to the U.S.-China relationship. And to help break down the intricate balance between the U.S. and China, we turn to Caroline Freund. She is Dean of Global Policy and Strategy at UC San Diego. She's also a former senior fellow at the Peterson Institute for International Economics, a former global director of trade, investment, and competitiveness at the World Bank, and she also worked at the Fed and IMF. Her perspective, invaluable.
I want to start with this idea of respect and really what it means in the way that China is using it, in your view, in regards to tariffs and the tit for tat when it comes to this trade war.
Yeah, I think you have to take into account that China is a country that prides itself on having 5,000 years of civilization. So a 5,000-year history. And they do things gradually. They've had the time to learn to do things gradually. And Trump is doing things very chaotically. And that's not something they're used to dealing with. There have been comments by J.D. Vance and others talking about peasants lending money to buy things made by peasants, lending money to the U.S. So this isn't the way to work with China. They expect to have a deal worked out by the technical folks, and then the leaders to only meet once that deal is worked out. So bottom up and gradual, not the top down and chaotic that Trump is initiating.
So is this just jockeying? I keep wondering, these two economies still kind of need each other, or do they not? Like, is there something we're missing in terms of what's going in internally in China? And Tim and I have talked, we've listened to some podcasts who said, you know, COVID changed a lot of things and a lot of American businesses pulled back, or executives and eyes on the ground, maybe not so much in China. And there's a lot more sophistication in terms of what they are producing and how they are doing it that maybe is going unawares by the world at large. But help us understand, what is China today? It's not just a manufacturer of sneakers and T-shirts.
No, China is a very advanced country with some of the frontier technologies on things like electric vehicles, autonomous driving, and even in AI, they've made substantial progress, though they're still behind the US. But there is a symbiotic relationship. So China is worried about deflation. We're worried about inflation. And these are exactly two sides of the same coin. They have overcapacity. We don't really have the capacity or know how to do manufacturing anymore. And while there have been problems with the relationship, we do need each other. And
why do we still need each other? Why do we still need each other? Because I think there are some who would say, China maybe doesn't. I don't know. Or maybe the U.S. doesn't.
Well, there are a lot of things we get from China that we need to keep our economy going. So we live in a world of global supply chains where parts and components are coming from China as well as other countries. So trying to manufacture in isolation is just frankly a non-starter, won't be competitive in a global market. China's also sitting on 700 billion in US dollar assets. So that's another area where China has a pretty big trump card to play. I don't think they will. It's a country that wants stability. It's a careful in any policy move it takes. But we very much need each other. We need the goods each other produces, and we need to work together and work through this. It's not perfect. Some decoupling is probably good, but sudden and sharp is going to be painful. And that's why we see it with what's been happening with the stock market now. I think we're not only having an own goal, we're on our way to an own hat trick.
The White House press secretary, Caroline Leavitt, said this week that China needs what the U.S. has, which is consumers who spend money. Is that accurate in your view?
Yeah, it is. That's why they're suffering deflation. That's why they have excess capacity. They need what we have, but we need what they have too. We have a population that's used to buying things and buying things cheaply. The growth of the Chinese economy has been part of what kept inflation so low for so long and supported global growth. So yes, they need us, but I wouldn't say that doesn't mean we don't need them. This is going to hurt us both. It may be a question of who it hurts more, but there could be a way to make it a little softer for both of us.
You know, one question that I keep asking anyone who will speak to me about this is, who has the leverage in this negotiation between the U.S. and China? You said the relationship is symbiotic. These two countries need each other. But is there one trading partner that is more powerful than the other, and why?
Well, I think initially it looked like the U.S. because China's economy is already in a slowdown because of demographics, because of their own property issues, property crisis there. So it looked like we had more power. They really, really need our consumer. But there's one thing they have that we don't have, which is a population that they can control and that is more willing to tolerate pain than the U.S. consumer. So at this point, I think it's kind of a toss-up.
So does that just mean President Xi is willing to inflict a little bit more pain maybe on his people, and means he can kind of fight this fight a little bit longer than maybe the U.S. can?
Yeah, and he has more authority. So he has complete control of the media. So my understanding from Chinese colleagues is that in the Chinese press, now a lot of people have access to VPNs, but in the Chinese press, the average person doesn't know that tariffs are over 100% now. So the numbers aren't out there. The information isn't out there. There's a calm there, and there's an ability to control the economy, stimulate the economy, support people that we just frankly don't have, as well as the consumer here who's going to be upset. You saw what happened over price of eggs. Imagine when that's everything you go to the store for. That's
a really good point. That is a very good point. Hey, one of the reasons we wanted to speak to you is you have done so much when it comes to trade. A reminder, you were a senior fellow at the Peterson Institute for International Economics, global director of trade, investment, and competitiveness at the World Bank. How does this trade war end?
That is the million-dollar question. Hopefully it ends with negotiation. So there does seem now to be negotiation with other countries. Trump has made it clear that if Xi rings him up, he'll take the call. So I think we can get there. But right now we have two big trucks driving at each other, and it looks more like a game of chicken. So time will tell, I guess.
If the United States aim, Caroline, is to contain the rise of China, If that is the ultimate goal, then what?
Mm-hmm. I think that's a really hard thing to do. China is a big country, so I think it can slow it. I think probably it already has with some of the restrictions on technology. The other side of that is it's encouraging innovation in and of itself. So the fact that we held back on AI chips probably made something like DeepSeek more likely. So I don't think there's a holding back of a country the size of China. So what we need to work towards is managing in a world with China and working more closely with our allies. So this could have been handled, in my view, much better by working with countries in Europe, countries like Japan and Australia, and sort of isolating China that way, encouraging China to play by the rules that we want to set as a globe. The U.S. is less than 15% of global trade right now. So there's 85% of economic might out there without us. We really can't engage in this fight alone.
Do our allies, and I use that term loosely right now because I think a lot of folks would say we're fighting with allies right now, at least when it comes to trade. Do they feel the same way about China?
I think they're beginning to, and I think one thing this will do is China now needs to sell all the goods it's not selling to us somewhere else, and other countries are very, very worried about that. So in that sense, we may pull them along with us, but Trump's vitriol has certainly pushed them away. So I think we're going to have to see, but I do think there's room for that if we behave a little more nicely.
See, the world would be better if we all just were a little bit nicer. It's really kind of sometimes not simply that.
No, right? Carol's looking at me when she's saying that.
No, you're super nice. No, I'm not looking at you, but I just, whoa. Caroline, thank you so much. We were really looking to do kind of this deep dive because we feel like it certainly is that relationship between the U.S. and China so important to kind of what happens next globally. She's dean at the UC San Diego School of Global Policy and Strategy, joining us from La Jolla, California.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
Shares of Whirlpool rallied as the company maintained its full-year financial outlook, despite uncertainty over global tariffs, saying their long-term impact will benefit the company's position in the U.S. home appliance market.
Whirlpool manufactures most of its U.S.-bound products in the U.S. and expects the new trade restrictions will help the company compete against foreign rivals.
We spoke to Whirlpool Corporation's chairman and CEO Mark Bitzer just after the company released its quarterly update.
Well, obviously you saw in our earnings release, we're, despite everything else going on, we're pretty pleased with our Q1. We're basically, I would consider our business largely on track. We hit the EPS pretty much in line with consensus. Our organic revenues were up 2%, almost 6% margin, which puts us on track to our full year guidance. And we're reconfirming guidance. So, obviously it's not all euphoric, but given everything else going on, I think we should feel pretty good about being on track in the current environment.
How would you describe the U.S. consumer right now?
Yeah, obviously, it's been a lot of volatility also on the consumer side. And I think if you want to say so, we're probably a little bit of a canary in the coal mine when it comes to consumer confidence. And the reason why I'm saying this one, every day, many companies have a big order pipeline. Our orders are pretty much 7 days. So I see it pretty fast if a consumer orders something or not. And we saw actually a very healthy consumer sentiment following the election pretty much through January, mid-February. And then we saw a clear deterioration of consumer confidence, in particular on the discretionary side of demand. Okay. And I think that continued to also in Q2. So we see right now the consumer probably lacks confidence about their financial future and they're holding back discretionary purchases.
Well, how does that compare with where consumers have been during your tenure at Whirlpool? Because we've spoken to you quite a bit over the last few years, through ups, through downs, through relatively calm periods. How would you describe the consumer right now relative to where the consumer has been during your tenure?
Yeah, Tim, I've been 26 years, so probably we don't have enough time to go give you all the ups and downs.
But is it better than but that gives us a great view. Is it better than the financial crisis? Better than the dot-com bust? Better than COVID?
It's how should I put? from an economic perspective, it doesn't, not from a human perspective, from an economic perspective, I think there's a lot of similarities to what we saw in the early days of COVID. And what I'm saying with on consumers, it's just, there's a, everyday new messages which don't necessarily help consumer confidence. So from a pure consumer confidence perspective, we just want to have stability in the message. I think consumers can deal with good or bad news. It's just the everyday changing news and the uncertainty, which neither helps business investors or consumers. And I think, so the drop which we've seen kind of in the course of 6 weeks, yep, that was probably among the biggest drops I've seen. Now, hopefully at one point it will also come back up again. But right now the drop was pretty fast and pretty drastic.
So we love talking with you. We've gone through so many cycles together. And I'm just thinking of those who are watching and listening to Bloomberg Business Week on this Wednesday. I am curious about your supply chain. Like, we are all getting a great lesson, right, in global trade, global supply chains. Tell us about your supply chain. And how the U.S., China, or just the U.S. tariff trade war is potentially impacting you or making you change it.
First of all, Carol, I want to give you credit, but it took you to question 3 to raise the word tariff.
I'm trying.
Kudos to you.
It's not easy.
And obviously there's a lot of moving parts at play. Ultimately, it comes back to, we are kind of the only and last American appliance company, and we produce 80% of what we sell in the US. And of what we produce in the US, more than 80% of our parts are sourced in the US. So we are a domestic producer. I know a lot of companies talk about reshoring or onshoring. We never left, okay? And that's a big difference. So as such, even though we're also faced with some headwinds, in particular in components, etc., ultimately, we will be a net winner because we're a domestic producer. And in this case, and this is different from other industries, there's capacity. We have enough capacity in our factories to fill them. And I appreciate other industries, it may take some time, but I think ultimately, and we all don't know what the final picture of the tariffs is, but something will be there. And we do see us benefiting from this one.
How do you want to see this trade war play out? Because I'm assuming that some of these tariffs help you domestically.
Well, and again, I think that probably needs a little bit of explanation. So Carol, actually, we're not asking for exemptions. We're not asking for tax subsidies or gifts or handouts or whatever. There are right now in the pre-existing so-called 232 and 301 tariffs, there are loopholes which hurt us, and they structurally benefit Asian producers. And it's put in simple terms, because of 232 tariffs, I pay in US for steel 2 or 3 times more than Asia steel. And any component which I can't get in the US, like a LED panel, I pay tariffs. So if the same product is produced in Vietnam or Korea, they don't have to pay the tariffs on steel. They don't have to pay the tariffs of components. That difference is big. It's about $70 per product. So put that in retail price, that basically means $150 different retail price. So all we ask for is just close the loophole. We're all in support of having a strong US-based steel production. I think we all agree it's important. Just close the loophole. That's all we ask for. So we don't ask for special treatment, just close the loophole. Take the disadvantage away. Again, I'm not looking for an unfair advantage. We're just looking for a level playing field. And then when we can compete very well.
So we're talking, of course, with Mark Bitzer. He is Chief Executive Officer at Whirlpool Corporation, joining us from Michigan. One thing I want to ask you, what you have learned about manufacturing in the United States, is there a lesson or something, a message you'd like to share with other folks who are saying, I can't manufacture in the United States?
And again, it's, Carol, as you can probably tell from my accent, I have a dual citizenship, American and German. So to sit here and say I'm staying here for patriotic reasons is probably not credible. U.S. production can be working well, and I'm proud of our 10 strong factories in the U.S. And if you go to a factory like in Clyde, Ohio, where you have 3 generations of factory workers, these are proud people who have worked very hard. So I know there's now a lot of jokes about U.S. manufacturing. You can produce in the U.S., and there's a very good skilled workforce which you can have, as long as we don't harm ourselves with kind of issues which make production more difficult in the US, like steel price and component costs. So I know some people are hesitating about moving back to the US. We have been producing in the US for 114 years with success.
So, I'm curious about, since you already produce here in the US and you have 80% of the production that goes to the US actually being made here, plus you source a lot of the parts here. You're relatively unaffected by tariffs. Would you say that the tariffs that the Trump administration has proposed or is even putting on have been a net benefit for your business?
It's again, so far there's more announcements than already actually in place. So far what is in place is the 232 and the 10% tariffs. But I go back to, and I know there's a lot of talk about what the previous Trump administration did, the 201 tariffs in 2018, because I know there's a lot of talk about did they raise prices or not. If you now today look back, these tariffs were put in place in 2018 and where we are today, washer prices today are lower than they were in 2014. So tell me one product category which has lower prices than 2014. And compared to 2018, there's 2 more factories producing washers in the US. So from that perspective, what the prior Trump administration did, actually in our industry worked. It brought new production and the prices did not raise. Now, there's always some moving parts as you go through this one, but it worked. Now, that may be different in other industries, but I think I know our industry pretty well. You add production capacity that ultimately will benefit the consumer.
Does the risk, though, of declining U.S. consumer sentiment as a result of rising prices in other categories and concerns about uncertainty moving forward, does that weigh to a greater extent than the benefit that you get from tariffs as a U.S. producer of products?
Yeah, I mean, I think it's a fair question. Of course, in the short term, there will be, call it wobbliness along the way. But I think, as I mentioned earlier, consumer confidence can drop fast, but it can also increase pretty fast. We've seen that in Q4. So I would say, what I describe on a structural capacity, these are long-term effects. I mean, you don't build factories on wheels, but you build them for 30 or 50 years.
Yeah.
Consumer confidence moves within a quarter. So I think even though there may be some volatility in consumer confidence, I think the long-term benefits will clearly outweigh the negative short-term consumer sentiment.
Mark, you definitely have a global perspective. I think there's some concerns, though, that the longer this trade back and forth, especially between the United States and China, but really between the U.S. and the world, that there will be long-term damage. How do you see it?
Well, it's again, I can speak more for my industry. I think ultimately what the current administration is trying to do in our industry, I support, of course, because we're a U.S. producer. I think the most important thing, and that is not only for our industry, people just want to have predictability. Okay, if you have pretty much every day a changing problem definition, that just makes it hard because you don't plan industrial production, you don't make industrial decisions if you don't know if that assumption is true tomorrow. So I think everybody will deal with whatever it is if they know this is now, that's a picture and it's going to be stable and people can count on this one. So I think it's more stability and predictability more than anything else, which I would be hoping for.
You mentioned that much of the sourcing that you do for the U.S.-based production is actually domestic sourcing. Still, I imagine there are components that are made outside of the U.S. Do you anticipate any supply chain issues as a result of what we've seen happening?
Yeah, and it's a little bit, and part of that is today our disadvantage because there are, as you point out, some components I can't buy in the US, like an LED panel for a washer and that kind of stuff. So today we have to pay tariffs while anybody producing Thailand, Vietnam doesn't have to pay tariffs.
Right.
I think over time, I would expect that for the vast majority of these components, over time, there will be supply base either in the US or in Mexico. And we see already some early indications. It will take its time, in particular in the electronic side more than anything else, but more of the mechanic parts like motors, et cetera, I think it will be quickly resolved.
All right, I just want to know, have you created a dishwasher that my husband and I don't have to argue over who's going to load it and unload it? I just want to know, do you have one like that, a robotic one that actually unloads and unloads? Have we gotten there?
Yeah, well, if you have a patent, let me know, and we can hire you as an engineer. First of all, I pride ourselves. We have the best dishwasher with the biggest capacity in the industry. Unfortunately, it doesn't load itself. I feel the same pain every day at home. Not every day. At least I'm accused of that every day.
Hey, listen, one last question. Do we have to be worried about a global recession? Is that anything that's on your radar, just real quickly?
I mean, again, that's why I said, Carol, earlier, it feels a little bit economically too setback to earlier days of COVID and whatever else.
Yeah.
It's just an uncertain outcome. I think right now the odds of a recession have increased. I'm not quite sure we're all the way there. It depends a lot what happens in the next 2-3 weeks in terms of business predictability. But I think we're living with an uncertain outcome, and that's what our job is to manage towards that.
All right. Well, when I get that design for that dishwasher that loads and unloads itself, I'll let you know. Mark Bitzer, Be Well, CEO, Whirlpool Corporation. This is Bloomberg.
This is the Bloomberg Businessweek Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Starting next month, I'll be allocating far more of my time to Tesla. And now that the major work of establishing the Department of Government Efficiency is done.
That's Elon Musk on this week's Tesla earnings call with investors and analysts, assuring them that he will significantly pull back from his work with the U.S. government and pay more mind to Tesla after the car maker reported its worst quarter in years.
Investors and analysts have increasingly called for Musk to refocus on the company, which is struggling under the weight of slumping sales and rising costs from President Trump's trade war. Protests, too, have sprung up in recent months in a consumer backlash against Musk's government work.
One especially vocal Tesla shareholder and Cybertruck owner is Ross Gerber, the co-founder, president, and CEO at Gerber Kawasaki Wealth and Investment Management. The firm owns about $65 million worth of Tesla shares.
I think this perception that somehow Elon's going to come back to Tesla and be working at Tesla more is a false perception, because I'm also involved with XAI. And I'm an investor in XAI, so I know exactly what's going on there. And they just merged with Twitter, and now they're raising even more capital to even get bigger to compete with Chat and all the other LLMs. And that's his main focus, and that's what he really cares about. So I think, it's nice what he says, but it's what he does that will ultimately matter.
Well, and we love talking to you, and we have for a few years now. And we always remind, and I always go here, that, you're not only just an investor in the company or various Elon properties, but you have owned Teslas.
He's got a Cybertruck.
Multiple.
I have a Cybertruck.
You got a Cybertruck, but
I drive a Cybertruck.
But
he still drives a Cybertruck.
But it's not so easy to drive a Cybertruck, is it, anymore?
I drive it right down the middle of Woke Avenue. You know what I mean? Which is where I live. And, fortunately, everybody else has a Tesla, so it's kind of hard to yell at a guy in a Cybertruck from your Tesla, right?
Yeah.
And this is probably the biggest issue that I have, is I feel like Tesla is not Elon's company. It's a public company that's owned 87% by the public, not Elon. And now the perception going from being this climate-friendly, changing the world for a better place company to being associated with Elon Musk and Donald Trump is really one of the saddest things that I can imagine for Tesla's brand. So I kind of am like fighting back from that, because I'm like, no, I drive an environmentally friendly truck, and you're yelling at me from a Ford F-150, and Henry Ford was an actual Nazi. So I'm like, this is really odd that an oil-loving, Nazi-driving car guy is flicking me off,
Do you like the Cybertruck? There's a lot of reports online about parts falling off, though I have read a lot about how people love it. Hannah Elliott loved driving it around last year. Do you like it?
Tesla should be paying me to do ads for the Cybertruck, because I actually love the Cybertruck. The Cybertruck saved my life during the Palisades fire. I can give you 5 reasons why you should have a Cybertruck. And I can also tell you 5 things that are disappointing about the Cybertruck that could have been better or could be better in new versions of it to make the car sell better. So I know the truck in and out, and part of the performance on the manufacturing side is very disappointing. I have not had those problems personally. My truck has been solid. I let some kid drive it. He crashed it. They fixed it quickly. The car has been great. But I can't tell you how important it was to my survival, actually, during one of the hardest periods of time of my life.
Is it because of the air filtration? Like what?
Yes.
How did you use it?
Wow.
Yeah. The air filtration is what saved my life, because I was in the middle of the fire and I couldn't breathe. And so I was trying to fight the fire like an idiot. But this was before the firemen came and saved me. And it was so smoky that I had an N95 mask that I was like dying. And so I would like jump into the truck, and I had the HEPA filter thing running, and it works,
Yeah.
And so I could breathe, and then I would jump out of the truck and then like try to deal with fire, and then I could only deal with that for so long before I have to get back in. The other thing about the truck, was the tonneau. It's a hard tonneau. So when I put all my stuff, I was living out of my truck for 2 months, and it locks. And this is a really nice thing where most pickup trucks don't have a way to cover and lock everything in your bed. And so I was able to basically keep all of my important belongings safe in this truck. And one of the things that happened after the fire was looters were attacking people's cars knowing that they had all their stuff in it. And a lot of people got stuff stolen out of their cars even after they dealt with the fire, which has sucked, and that was not a problem I had. So, there are many things about this truck that are great, and the story just isn't being told.
Are you okay? Your family, your loved ones okay now? Yeah.
My family's great. I'm not okay, I guess is the best way to put it. I've moved back into my house. I'm one of the few people that survived this fire. The fire ended 2 blocks from my house where I fought it, and the firemen ultimately stopped it. And so my neighborhood's normal, except nobody lives there yet except for me. I was able to fix my house pretty quickly, and I felt it was best for me and my family to move back as quickly as possible. And that's been true, but I live a very surreal life, right next to the edge of hell, and I see it every day, and it sucks. And for me, I'm mostly suffering from, some level of depression and PTSD from the event itself, which was really traumatic. Like, I don't recommend fighting fighters.
We can only imagine. And we, from afar watching, certainly felt it, but I can't even imagine seeing it firsthand. Well, speaking of challenges, and forgive me for this segue, but one of the things that struck me, we've been lucky to talk with you. This is, our second time in the last 24 hours. And one of the things that continue to kind of, Tim and I want to know more and more, and you really shed some great color, and I want to share it with our audience who are watching and listening right now, who may have missed it yesterday, of what you had to say about what's going on in terms of EVs in China. I think we don't have any concept of how sophisticated, how good they are getting on stuff like EVs and other things.
Well, once again, I haven't been to China. I only know because I follow all the car companies in China. And there's a big misperception about China, I think, and you saw it a little bit with the trade negotiations, like they're somehow behind us in technology, and like we're holding back our technology from them, and that will slow them down. That is a wildly incorrect way to look at China. If we hold our technology back from China, what happens is they develop even better technology because we force them to, in a way, and they're extremely determined, intelligent people who will work extremely hard to achieve whatever goal they need to achieve. And so when Tesla came to China, Tesla was the first company in China said, you can have 100% ownership of the factory, come here with open arms. And we had never really seen that before with companies, where China always made them do a JV where they would own half the company, kind of thing. And so the part of that strategy was to send a whole new generation of Chinese workers to work for Tesla to learn how to do stuff. And they have. And so you have Chinese entrepreneurialism, which is pretty good for a communist country. And then you add in know-how and government support, and you get a pretty potent way to develop pretty good vehicles. And that's what they've done. And so China's built a whole new infrastructure around electric vehicles, which was actually my dream for the United States.
So that raises the question, Ross, since China's EVs are so good, and those are not available here in the U.S., should investors really think about the U.S. being the only market for Tesla because it can't compete outside of the U.S.?
Well, no. Tesla can compete anywhere.
Can it compete on price? Can it compete on quality?
It can. Once again, if Tesla had a focused CEO who wanted to beat the Chinese competition, they could have released that Cybercab as a Model 2 with a steering wheel on it and made that thing for $25,000. Like, people would buy it. It would be really successful. The problem with Tesla is they don't want to sell cars anymore. It's fairly obvious. In fact, they work really hard to convince people not to buy their cars. I mean, it's like the CEO every day talks people out of the products. So the real issue to me is, if you don't really want to sell cars and you want to sell cab rides instead, or robots, boy, that's going to be a long time till it makes $100 billion in revenue. You know what I mean?
Yeah.
So the Chinese are like, okay, we're fine with this, and Tesla's falling behind, and they're attacking everywhere they can. The Europeans and the United States have a lot of trade barriers against these Chinese vehicles because they're inexpensive and they sell very well. And I was in Mexico City, all you see are BYDs. They can't afford a Tesla, you know?
Yeah.
And so I think quality, you know, Europe and the United States, more Europe has always won on quality of vehicles. Like design and interior style and things like that, where China seems to be behind on that. But when it comes to technology, China seems to be well ahead.
All right. Elon gets into your cyber truck, not exactly car karaoke, but you guys have a conversation.
They know each other. Elon has responded to Ross. I've seen the tweets.
Yeah, he knows me.
Ross is an investor in XAI.
I know he knows you. So what's the 30-second question you ask him?
Why do you think he said he's coming back to Tesla? Because he knows I've been saying it every day for like months.
So that's what you ask him?
What would I say to Elon?
Yeah, 30 seconds.
The same thing I said to Elon when I first met Elon long ago, when he was tweeting a bunch of garbage and Tesla was struggling. I think it was the end of 2018. And like I was like, dude, you got to stop tweeting this garbage. This was like 7 years ago. You know what I mean?
Yeah.
And I was like, how is this the mission? And we got to raise money and we got to save Tesla. And like, this is just not helping. And I remember him looking at me sort of like, yeah, right. Sure. Like, you think I care what you say about my Twitter? And I was like, please, just like, I'm just saying this as nicely. And I remember because I was standing with somebody from ARK Investments and people were pretty surprised that I confronted him about Twitter. And I was a little bit nervous because he's a big guy. And, you know, I like Elon at the time. And so I was trying to be nice, you know. And of course, he didn't stop tweeting and he raised money the next day, which we invested in Tesla at that time. And it was extremely profitable. And I would say the same thing to him today. And it's like, I don't have to agree with your opinions and your viewpoint in life, but do you have to share that with everybody all the time? It's not necessary and it's not helping you be successful. So why share opinions that are so unpalatable to so many people when it's completely hurting you from achieving your goals? That's what I would say.
All right. Good stuff. Elon, if you're listening, we'd love to hear what you would respond to Ross. Ross, thank you so much for all of it and for being so honest and real. Ross Gerber, he's president and CEO. Stay safe. Be well. Of course, of Gerber Kawasaki Wealth and Investment Management out there in Santa Monica.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
Plenty ahead in our second hour of the weekend edition of Bloomberg Businessweek, including threats to the independence of the Fed, the most powerful person in Washington, D.C. that's not named Trump, and the guy who connected President Trump to the manosphere.
Plus, speaking of the president, how his global tariffs may affect agriculture, farming, and sustainability. The director of the film Common Ground joins us later this hour.
First up, President Trump raised eyebrows this past week over whether he will seek to limit the Federal Reserve's independence and try to remove Fed Chair Jay Powell.
Which raises the question, can the president even do it? To better understand it all in the possible long legal fight, we reached out to Columbia Law School Associate Professor Lev Menand and Bloomberg Economics Editor Molly Smith.
I mean, it's definitely a serious consideration right now, and the way that Trump just keeps going after Powell day after day in all of these different tweets, whether people are taking seriously this idea of preemptive cuts, quote, being discussed by many, that is definitely refutable and not at all being priced in. I mean, there's a roughly 16% chance right now, looking at the Bloomberg Warp screen, of a rate cut in May, which is coming in a week or two. So no one's really thinking about that happening right now. And if rate cuts are to happen, people are saying that's because the economy is going to slow because of Trump's policies, not because inflation is slowing, like he claims. Yeah. Exactly.
Okay.
Professor Menand, come on in on all of this. The Supreme Court considering a petition from the president that could allow him to override some legislation establishing independent agencies such as the Fed and remove their leaders without cause or notice. What exactly is this case about? Why are we talking about it, especially since this case does not involve any Fed officials? And why is it, though, potentially so significant for the Fed, for Fed governors, and perhaps other heads of different organizations in the government?
So the Fed is one of many independent agencies in the government, and its 7-member board enjoy the same sort of protection from at-will removal by the president as other agencies, like the Federal Trade Commission, the National Labor Relations Board. And President Trump, in his few months in office so far, has already challenged the laws protecting these officials from removal at pleasure by the president. And those challenges, he removed several officials illegally. Those challenges are making their way through the courts right now. And the Supreme Court of the United States is currently considering a petition from the government, from Trump, to allow him to push these officials out of office until their cases make their way through the whole courts, which could be months and months. And that petition could be decided this week. And if Trump were to prevail, then he could go ahead potentially and fire the whole Fed board, not just Chair Powell. And those officials, if they wanted to challenge those removals, would be out of a job during the pendency of the litigation.
Professor Menan, given what you know about the case, what you know about the arguments and the history, and of course the justices as well, do you have a prediction what is likely to happen if the Supreme Court rules one way or the other?
It's really hard to say, but already we have an administrative stay issued by Chief Justice Roberts in this case, Trump v. Wilcox, which meant that Wilcox, who had been put back in her job at the NLRB by the lower courts, was taken out of her job while the Supreme Court considers President Trump's emergency application. That suggests to me that there are many members of the court who might consider granting this stay pending appeal on an ongoing basis. I think that there are members of the court who have expressed in prior cases real reservations about allowing the expansion of presidential power to touch the Fed. There's a desire to carve out a Fed exception. But the more uncertainty there is in this space, the more likely we would see President Trump potentially testing the boundaries. And so that might not mean a removal of Chair Powell, but it could mean a removal of Governor Barr, Governor Cook in the coming weeks.
Whatever happened to checks and balances, Professor Menan? I'm just curious. We always just thought this government, how incredible, right? 3 separate branches, checks and balances. Are you, as someone who teaches, who studies, and the power of the Supreme Court, like, are we losing that? Have we lost it?
We are very much losing checks and balances. This is not a new thing. This is the culmination of 40 plus years of efforts to reconceptualize the presidency under the Constitution in such a way that Congress's laws attempting to constrain presidential power can be violated by the president. And Ronald Reagan was the first, really, to push this in 1981 when he took office, and there was a Democratic House, and there had been a Democratic House as long as anybody could remember. Reagan administration officials sought to assert presidential authority under the Constitution to do certain things that they didn't have the votes for in Congress. Those moves were ultimately embraced by the Clinton White House, and we've had a sort of ever-expanding conception that the Supreme Court has validated at several points, starting in 2010 with the Roberts Court decision in a case called Free Enterprise, which restricted the ability of Congress to protect the independence of the PCAOB, the board within the SEC that regulates accountants. We had a series of cases that validated more and more this once fringe sort of constitutional theory of the presidency. And now we have President Trump in his second term trying to do a full bear hug of this sort of this presidentialist theory. It's called unitary executive theory. And that is very inconsistent with traditional checks and balances.
Just to expand on this idea of checks and balances, it's not so much one that's afforded by the law and the different branches of government, but just within the Fed, something that I don't think we speak about enough with respect to who makes decisions on interest rates is that the chair of the Fed does not act similarly to the president of the United States. They don't have executive power to just unilaterally make a decision for the entire Federal Open Market Committee, which is comprised of 12 members, which includes the 6 governors on the board, which, Powell is one of those people. And to what the professor was just saying, that if Trump were to remove Powell, then that would also then set a precedent. Is he going to go after all these other governors? But again, this is a decision that on interest rates, it's set by this whole committee. It is not just by one person. And there would be some real credibility concerns if new people were to come in, that all of these other people who are on the board, or on the committee rather, who have been advocating for keeping interest rates steady, are they really just going to go along with this new person just because Powell was fired?
Look, I understand why the president wants interest rates to be lower. He has a background in real estate. He likes low rates. He's, we've talked about this in the past. But Carol, I would think that a leader of a country would want a strong, independent Federal Reserve because of the confidence it gives markets and because of the way that historically the U.S. has been looked at as Eric just told us, the central bank for the entire world.
Gold standard, like in terms of the U.S. central bank. And I do think about this, Molly, that if it's not just the Fed chair, but goes after the other Fed governors, that's a whole new ballgame just quickly.
Yeah, of course. I mean, we're talking about half of the Federal Open Market Committee right there if he goes after all those other people. So,
right.
And again, all of them are, I mean, the thing though that I guess maybe gives me some confidence is that no one is calling for these preemptive rate cuts. I don't know what economist Trump is going to find who is calling for that right now.
But it also plays into the game of instability if we constantly see this kind of movement.
Sure.
Both of you, thank you so much. Professor Lev Manan, thank you. Columbia Law School Associate Professor of Law, joining us, along with our Bloomberg News economics editor, Molly Smith, right here in studio.
This is the Bloomberg Businessweek Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Now, as President Trump continues to challenge the longstanding order of many things inside and outside the United States, we were reminded this past week of some of the forces that brought him back to the White House. That included the predominantly male digital creators that emerged as a key force behind Trump's presidential victory.
And indeed, if you go back to March of 2022, the Nelk Boys, which I hadn't heard about until
I learned so much in this story.
They hosted President Trump on his first podcast. He then appeared on several conservative-friendly shows, including the ones hosted by Joe Rogan, Nathan Ross, Andrew Schultz, and Theo Vaughn.
I didn't even know there was an elk boy. Keep going.
All right. Outlets including the Wall Street Journal credited Barron Trump for his father's entree into this world. And Barron indeed advises on his demographics interests. But it's John Shahidi who actually is making the calls to arrange the appearances or finding out who can.
And if you're saying, who? Well, then maybe you should be. And this is why you want to listen, stop what you're doing, and check out what our Sarah Fryer has to say. She writes in Bloomberg Businessweek about Shahidi, who's now looking pretty critical to President Trump's 2024 win. Sarah is big tech team leader for Bloomberg News. She's also the author of No Filter, the inside story of Instagram, and she's out there in our San Francisco bureau. All right, Sarah, lay it out. Who is John Shahidi?
Well, he was a manager in the music industry of folks who had pop contracts, big songs like Anita, Lele Pons. He worked with several DJs. And then he realized.
All right,
that
Tim and I are just saying, it feels like you're speaking a foreign language. I'm just going to say, but go ahead. This is why
Carol's cool. She knows all these people.
No, keep going.
So this is a guy who's running with the music business, doing great, but starting to really warm up to Trump. This is during the first Trump term, and he's not getting a good response when he's talking about it. People are kind of shutting him out. He doesn't get invited to the parties he's used to getting invited to. People decide not to include him in meetings. And he realizes, instead of shutting up about how much I like Trump, I'm just going to leave this industry and go for a new opportunity. And he saw podcasting become it was really emerging as a way that people were wanting to spend time online. The pandemic occurred. It was becoming even more and more like a regular consumer behavior. And he's a YouTube guy. He's worked a lot with digital creators the reason I knew him back in the day was because of his work on Vine with a lot of influencers, Instagram influencers. And so he thinks podcasts are going to go big on YouTube, and he starts partnering with a lot of those businesses. Now, meanwhile, he gets back in touch with his old friend Dana White, who's also a very close friend of Trump, who's running the Ultimate Fighting Championship, and White decides that Shahidi needs to know Trump because Trump should be on these podcasts reaching young people. And so that's what happens. He really works with, through White to get to Trump, and convinces Trump to go on with the Nelk Boys, with Theo Vaughn, with a bunch of these other names you listed, in a way that he can appeal to a voter where they're listening casually. I mean, this is maybe somebody who might not be showing up at his rallies or might not be watching Fox News. Fox News demographic is very much aging at this point. And it's somewhere where Trump cannot be edited. He can talk about whatever he wants. And there's not going to be a time limit. These podcasts, Rogan's shows sometimes 3+ hours long. So it becomes a perfect venue for Trump. He kind of has no idea what a podcast is once he starts doing it. He starts loving the response he gets, and he sees the numbers. And he's really been embracing this group of podcasters and Shahidi and the whole UFC world as part of this new era in his presidency.
We'll talk a little bit about how Shahidi sort of went from somebody who wasn't necessarily invited to dinner or parties to somebody who's now at UFC fights with members of the administration, including the president. What sort of happened there? And also, he's been kind of accepted into the tech side of things, Sarah, which you cover. You know, he's got a direct line to, it sounds like, the folks at YouTube, at Google's YouTube.
Well, he became a kind of honored guest by the standards of Spotify, YouTube, and Meta at the inauguration. They realized what he'd done here, had this investment in podcasts. Google actually spoke to the power of podcasts on its last earnings call. They said that people really tuned in to get their news from podcasts ahead of the 2024 election. And they credit that as a really strong growth area of their YouTube business. So Shahidi was pretty early to that market. And he's also realizing that this is where all of the platforms are going to go. He knows Elon Musk. He's known Elon Musk for years. He brought Elon Musk to fights back in the day when he was representing Floyd Mayweather. He worked with Justin Bieber, Elon Musk. I have a picture of them going to a fight together in 2013. So he's known Musk for a long time. He invested in X, in the new rendition of Twitter. So this is the crowd that he hangs with. And he's really not so much a manager of these podcasters, but a business partner. And that, to him, is more foolproof, more unlikely that he will be fired with a change in the winds politically. If he's a business partner with these guys, they're selling a product together, he's merchandising for them, and they have some sort of goal that's not related to what advertisers think about content policies, which is another big factor in this, in another area where he's very aligned with Musk.
Great strategy until you have a tariff war, trade war. And those goods and merchandise maybe are produced in China. And then there's no
tariff on podcasts, Carol.
Then it's rough, but it's rough on everyone at once. Yeah, I think that's a good point too. Is that podcasts are a good that just requires some guys in a room talking. In this case, it is mostly guys. I mean, this is the manosphere. This is like 98% male viewership podcasts where they're very much the fraternity demographic, and these are the people who were really encouraged by a lot of Shahidi's partners and podcast friends to go out and vote for Trump.
I mean, that's what's kind of cool. Just 30 seconds. I mean, it sounds like the Trump administration realized the access that Shahidi has, right? And
we've written in prior pieces about how the Harris campaign realized towards the end that they were going to need to make a last-ditch appeal to men, and they tried to make it work out with Rogan. They tried to make it work out with Theo Vaughn. They had a lot of rules that Trump didn't have around what they wanted to say. They couldn't get the scheduling right, and it was hard to convince people to act, right? To say, we got to do this, we got to prioritize this, because it didn't seem like that was going to be a big deal. But, in the 2024 election, it really was like, are women going to show up or are men going to show up? And the men did show up.
Yeah, and you got to find them where they are at. Sarah Friar, thank you so much. Big tech team leader, Bloomberg News. Check out her book, No Filter, and check out her story from Bloomberg Businessweek. You can find it on the Bloomberg and, of course, at Bloomberg.com. Also, in the upcoming new issue of Bloomberg Businessweek magazine. Cool stuff.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
Russell Vogt is a Trump loyalist. He's now the director of the Office of Management and Budget. He's also acting director of the Consumer Financial Protection Bureau.
A self-described boring budget guy, he's best known for co-authoring the 900-page policy playbook of the Heritage Foundation's Project 2025, which has become something of a Bible for Trump's second term.
It's Vogt's think tank that has produced numerous policy papers that advocate for such Trump fixations like the annexation of Greenland and enacting broad tariffs, among many others.
And according to Bloomberg Businessweek columnist Max Chafkin, it's also really Russell Vogt, not Elon Musk, who's steering the Trump administration's Doge crusade. So, who is he?
Russell Vogt, well, he is the director of the Office of Management and Budget. But more than that, Tim, as you said, he is one of the core ideologues behind this presidency. So Russ Vogt, he served as the head of OMB at the end of the last Trump presidency, and his big idea really goes around executive power. And it's this idea that the executive, that's the president, Donald Trump, should be able to have much, much wider discretion to run the government and really to run the country than I think most, even either Democrats or Republicans, have generally allowed in the past. He's also a big time deficit hawk. He started his career working for Phil Gramm. He was a senator, starting in the 80s, was one of the key people behind the effort to balance the budget in the 80s and the 90s. And so Vogt has these two threads, one deficit hawkery and the other being executive power. And those two things work really nicely with what Elon Musk is trying to do. Because, of course, Doge is about both of those things. It's about cutting the deficit, but also sort of doing things more aggressively, with the power of the presidency. And so Vogt and Elon Musk have this kind of interesting alliance. And it's especially interesting because they're so different. They couldn't be more different from one another.
All right. So having said that, we focus so much on Elon Musk. He's been the face out there in public in the Oval Office when Donald Trump is holding, the President Donald Trump, of course, is holding press conference about what Doge is doing and so on and so forth. So I guess there's an assumption that once maybe, there's been some speculation that maybe Elon Musk, his days at Doge are numbered, that's it. And yet that's not the case, is it? If that's how it plays out.
People within the Trump administration definitely don't see it that way. I mean, as you say, Carol, at some point, Elon Musk is going to have to give up his full-time role in the Trump administration because he is a temporary government employee. That is going to sunset after 130 days. We don't know exactly what that'll be, how exactly they're counting the days, and it would not surprise me if it stretches on. But at some point, Musk is going to take a step back, and certainly within Trump world, this is seen as being part of Russ Vogt's domain, and that he and people around him are ready to pick up where Elon Musk left off. And it's not as if I don't think Elon Musk is going to go away from the world of Trump. I think he'll still be very vocal on social media. But when you're talking about that day-to-day role, it will go away. And if you're thinking that Musk going away is going to change the trajectory of what Trump is trying to do, I think you would be mistaken, because Russ Vogt has been working on these issues for years, long before Elon Musk proposed the idea of Doge. Vogt was proposing sort of very similar things from his perch as the head of this, MAGA think tank, as being one of the kind of leading lights intellectually in Trump world.
All right, and as you talked about, he's very different than Elon Musk. And so I do wonder, like, what's the speculation about how these cuts and things might play out if Elon Musk leaves and he's in charge?
Yeah, the difference is it's almost comical. So Musk, of course, he loves to be front and center. Vote, very low profile, barely talks about himself. Rarely gives interviews. Rarely gives up any personal information. We know everything there is to know about Elon Musk's personal life. Musk, of course, ideologically scattered. Vote is very, very disciplined, and that you could see that in two different ways. On one hand, I think there's some people who see Musk kind of working against Vote and some of the ideological components of Trump's base. On the other hand, Vote and people close to him see Musk as this kind of force multiplier, as this face of this otherwise maybe difficult to sell operation. You have this very popular, out there guy in Elon Musk representing these changes in the public. Meanwhile, behind the scenes, you have Russ Vogt and his allies doing the actual work.
Well, so what have they been able to accomplish thus far? Because Project 2025 was brought up during the campaign quite a bit, in fact, by Democrats. And the president at that time distanced himself from Project 2025. What have they been able to accomplish?
Yeah, there's a lot there. I mean, Project 2025 has a large number of co-authors in terms of, and they're different positions. Like if you look at the tariff section of Project 2025, there was a pro-tariff section and an anti-tariff section. They're actually like two dueling proposals. Vogt is pretty much aligned with Trump on everything. So he was for the tariff. He was publishing, these very hawkish pieces about tariffs in the years running up to the election. And in terms of sort of executive power, this idea that Trump should be able to run the government, I mean, that is a place where they're making a lot of changes. I mean, we're seeing, some of this is caught up in court right now, and it's unclear how many of these attempts to, drastically close or reduce the size of federal agencies, how much of that will stick. But in the story, we talk about the CFPB. That's the Consumer Financial Protection Bureau. Vogt is also running the CFPB. And right now, this is locked up in court. It's not clear what's going to happen. But when you talk to people who work there, I mean, nothing is happening right now. The agency has not been shuttered, but it also is clear that its ability to do stuff has been drastically reduced, and so in that sense, he's done a lot. That said, there are the questions around, how much of this is gonna stand in court, how much of it will, stand up to congressional scrutiny, a change of power, and so on. So the jury's still out there.
Well, before the jury was even out there, our team spoke to Kevin Roberts, the president of the Heritage Foundation. That was back just after President Trump won the election. This was on November 11th. He was on Balance of Power. Check out what he had to say about the opportunity that he saw then.
We think that this is the beginning of a golden era of conservative reform. I will say that because the work of Project 2025 represents the conservative movement, it would be very difficult for anybody to implement policies on education, on the border, on taxation, without at least consulting those ideas and people. That's not some arrogant or hubristic comment on our part. That's just the nature of how policymaking works.
That was Kevin Roberts, the president of the Heritage Foundation, back on November 11th, 2024, joining us on Balance of Power. Max, when you think about this term versus Trump's first term, are there ideological differences because of the influence of the Heritage Foundation, of Project 2025? Do you see differences in the way that he's making rules, or the way that he's putting policy into effect? Do you see it?
For sure. Now, I think the difference is that during the last Trump presidency, Trump came in without this kind of broad base of support. It had been a closely contested nomination. There were a lot of competing factions within Trump world, and in particular, you had this kind of business faction, right? That was pushing against some of these policies that we've been talking about a lot. Whether we're talking about tariffs or various erratic behavior on the economy. And what's happened instead is you have this kind of base of committed ideologues who have spent years preparing for this moment. That's what Project 2025 was all about. It was like, the last time we had this, as they see it, this like deep state that was thwarting them. Now we're going to figure out how to actually do stuff. So what they're trying to do is avoid the kind of checks of these more moderate factions within Trump world. And Vogt is a really interesting person here because Vogt was kind of dead center of some of the biggest controversies of the last term. So Vogt was involved in holding the money up, the aid to Ukraine up. That happened through the Office of Management and Budget. Now that led to obviously an impeachment hearing and everything. As Vogt saw it, that was the deep state, trying to stop Donald Trump. So there's a lot of ways in which the guys involved with Project 2025, including Russ Vogt, have been sort of preparing for this moment for years. And I think that's one of the reasons this presidency has been so much more hardline ideologically than the previous one.
Well, that's what I find interesting. You go into some great history about his time working for Senator Phil Gramm. I mean, pull out your political history books, but Texas Republican, fiscal hawk, and you say he certainly had quite an impact on Vogt in terms of where he got that from. But I think what's really interesting is, this idea of these views on executive power. I mean, I think is what's so fascinating, right, about this second Trump term, consolidating executive power like we've never seen before. And he certainly is helping the president do this. And
that's certainly where these kind of libertarian Phil Gramm has a long and interesting career, but I'd say he's more of the sort of libertarian bent than somebody like Russ Vogt, and that's where the difference is, right? Whereas a lot of these deficit hawks, the old line deficit hawks, were really interested in Congress as the forcing function. For Russ Vogt, it's the executive. It's kind of clearing the field and letting Donald Trump have as much leeway as possible. Of course, critics are going to say too much leeway. We're bordering on an imperial presidency. And so that's the kind of like ideological conflict that's playing out behind the scenes, as Trump does his thing.
Yeah, it's just, fascinating, a story like yours, the people that are so instrumental in shaping what this Trump term looks like. Just really amazing stuff. Max, thank you so much. Really appreciate it. Max Chafkin, columnist at Bloomberg Businessweek, co-host of the Elon Inc. podcast. Check out his story. This is on the Bloomberg, coming also in the new issue of Bloomberg Businessweek magazine. You can find it at Bloomberg.com too.
This is the Bloomberg Businessweek Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Earth Day was this past Tuesday, and once again we find farmers among those at the center of President Trump's trade war with China.
With lower crop prices and higher costs for farm necessities, the threat of retaliatory tariffs can further hurt U.S. farmers. That's not all. In the U.S., farmers have a deep sense of just how dependent they are on China for a steady clip of demand, a trade flow that's allowed the U.S. to rank among the world's top crop exporters.
If that trade dramatically shrinks, it would likely spell disastrous consequences for the agricultural economy that helps power America's heartland. Rebecca Tickell knows about farming in the United States. She is also a filmmaker and director, along with her husband Josh, of the film Common Ground, which looks into how food production and agriculture can be done better with less environmental impact. We've talked with them before. She has a great understanding of the industry. Rebecca, it's great to have you back here on Bloomberg Businessweek. Got to start, though, with what kind of dominates our world. We're all focused on D.C. policies, tariffs, trade wars, supply chains, the current political environment, the current talk about tariffs. How does that impact the agricultural world and also really more specifically the regenerative farming world?
Specifically how it affects agriculture today is farmers are going bankrupt. They have become debt serfs to feeding us. And the reason is because there's so many agricultural inputs that not only are creating runoff, degrading the land, creating food that doesn't have nutrition, but as the costs rise, what's happening is these farmers are getting less and less profit. And it's created an industry where farmers have a 5 times higher suicide rate than any other industry. And we're talking about the US, which is a huge agricultural exporter and an industry that's harming the very people that are growing the food that we're exporting. It's a system that's not currently working. Regenerative agriculture is based on local supply chains, local economies. It's more based on circular economies versus this idea of extraction and this sort of global food supply chain. That is not a system that actually is realistic or could ever work. That's not how living in a regenerative way could ever function, because you have to eat the food that you grow in your local environment with inputs that come from your local environment. It has the benefit of not only creating a huge surplus of economic growth for the farmers and the economy, but it creates this wealth of resiliency, of biodiversity, of a variety of different types of crops versus a monocrop that's then going to give that farmer a much higher revenue stream. And farmers that are switching from industrialized agriculture to regenerative agriculture see a 90% increase in their profits within year 1.
Yeah, I just want to jump in because we don't have a ton of time here. And I want to stick on one point that you mentioned, which is the idea of eating what is produced close to us. The way that we experience food in the United States right now, and I'll just use my own kitchen as an example and my own fridge as an example. I've got bananas from outside of the US. I've got strawberries from very far away, maybe California, maybe Mexico, maybe somewhere else. I've got apples from New York. We've got greens from California. We've got almonds from California. And, that's 2,500 miles away. So everything that I'm eating right now in April is from outside of the state, except for apples right now. That's just because of where we are seasonally. Are you saying that we should only be eating what's produced close to us?
I'm saying that if you want the most nutrient-dense food, if you want to support a healthy agricultural system, then we're going to start looking at the regions that we live in to feed us. And so we don't need to be sending our food out of the country. We don't need to be importing synthetic toxic inputs to spray on our fields and farms and that we then get exposed to. There is a natural, simple way to farm in nature's image, the way it was done for millennia before we started farming in this crazy way with all these synthetic inputs that we call the quote unquote green revolution.
I think one challenge to that could be the fact that you have different regions in the United States that are set up specifically for growing certain things. Like, let's think about Iowa, for example, and the so many acres that are filled with soybeans in Iowa, corn as well. Over half the soybeans that are produced in the U.S. actually are exported, or over half the soybeans that are exported to China. We can't really change the environment to use those soybeans that are actually going somewhere else, right?
The idea that soybeans being shipped to China is somehow feeding the world is totally a backwards notion. Like, we don't need soy to be healthy. That soy then is fed to something else, that then is fed to something else. That is an insane model that we're going to ship soy to China, then they're going to feed that to an animal, and then we're going to ship that animal back here and eat that. That is not a system that is regenerative. It's not a system that is healthy. That's not a system that makes any sense economically. The way to be healthy, the way to have a thriving economy, the way to support the people who grow our food is to support the people that we can find in our regions. It drastically reduces the transportation costs of the supply chains, of reducing the dependency on the volatile fossil fuel-based inputs.
Well, you know what? One thing I want to challenge you with, and I think some people who are listening who are like, yeah, this sounds so good. And I think when we've talked before, I remember maybe bringing up working with Chipotle, who really thought about their producers and were trying to kind of go back the way things used to be produced, this clean cycle that doesn't hurt the environment, that actually helps the environment and keeps it going. But what I'm wondering is, Rebecca, can we really transform industrial farming to regenerative ag and ramp it up so that the process of regenerative farming can feed everyone in the United States and, potentially feed the world? Is it even possible to do that?
100%. It's already happening. The USDA is already funding climate smart agriculture. Major institutional investors and banks are exploring soil health linked financial instruments. We are literally at the tipping point right now. And it's the early movers in the regenerative ag movement that will be the leaders of this huge next green economic wave.
What's holding it back? What's still holding it back? And what percentage of the food we eat is actually regenerative farmed?
Currently, it's a small percentage. It's less than 5% in the United States. You'll find regenerative organic agriculture. What's holding us back has been the policies that keep us locked into this crazy industrialized cycle of growing food. That's, I believe, beginning to change. We're starting to see people get really excited about the economic benefit of regenerative agriculture and the surplus of food that comes from that and the health benefits. It's a win-win-win-win-win. The environmental benefits that come from that, the climate resiliency that then impacts the farmer's pocketbook, because they don't want to talk about climate change, but they do want to talk about the weather. And all of that is impacted by how we grow our food. And farmers are beginning to realize that, and they want to get out of this model. They want to make a profit. They want to take care of their lands. They want to grow healthy food. This is something that's important to them. I come from a legacy farming family, and I know, and my family has suffered from exposure to these inputs that have been imported. And so there's a real opportunity for us as a country to lead the way, to show what it looks like to create real revitalization of our economy, of our environment, to create stability. And all of that is through making some very simple shifts in how we grow our food. And the big part that's holding us back is the way we think about it and the way that government has put these policies into place that keep us locked into that extractive model.
It sounds like perhaps maybe you see this trade war as an opportunity to completely reshape the U.S. agricultural industrial complex, no?
I think that's the only way to look at it. This is a huge opportunity. We have a very short window of time to course correct here. Because if we think it's bad now, we should look at what it's going to be like in 30 years if we continue down this path. We're going to reshape our planet. And so if we are able right now to start to look at how we can really build that resiliency, that economic resiliency, that climate resiliency, then we're going to see a totally different world. And this is the moment to do it. The farmers know it. The government is starting to catch on. And you know who else is starting to catch on? Big business. I mean, Monsanto, Bayer is already developing a quote unquote organic Roundup. So people are starting to think about what they're starting to adapt.
Some might say finally.
Right?
One thing I want to ask you, do we have to get used to, when I grew up, and it's not that long ago, it's like things were in season. We had apples in the fall. We went apple picking. Like we had peaches at certain times. We had berries at certain times. We had watermelon in the summer. That was our world because it was the cycles of the seasons and what we could get because it wasn't such a global food supply. I mean, I can get strawberries every time of the year. It's like kind of amazing. Do we have to maybe redefine our expectations when it comes to our access to food if we really want to maybe be more respectful of our environment and how we grow things?
We do need to reset our expectations about what we eat. If we think that what we're eating now is going to create longevity and health, that is totally backwards. If you look at what we ate 100 years ago, it was locally sourced. People were healthy. They weren't nearly fat, sick, and dead like we are all right now. Essentially, a regenerative model is one that is a healthy model, and it tastes good. Nutrient-dense food tastes good. So when people start to make this switch, at first they're like, oh, it's too expensive and oh, it's too restrictive. But that's not the case at all. When you go to your local farmer's market, you suddenly get access to a world of flavor, and it's local flavor. And it's one that you are symbiotic with because it's from your local environment. So absolutely, we need to reset our expectations when it comes to eating food, but it's one that we should celebrate and be excited about because it's going to make everyone's lives better.
Hey, Rebecca, before we let you go, we only have about 45 seconds left, but can this be done in your view independent of government support, or do you think the government needs to push farmers to do this?
Farmers do not need to be pushed to do this. Farmers feel locked in the current cycle. They're stuck there often by the bank loans that they have that make them forced to spray, which they don't really want to do when they get access to regenerative agricultural information. Everybody wants to make that transition when they realize they can. So I think farmers are ready to make the switch. I think the government is starting to catch up. I think we're going to shift the policies that are keeping us locked in this broken model. And welcome to the new movement. This is the age of regeneration. This is the tipping point of that. And the whole world is about to shift into this new model. And this is the next $1 trillion industry.
Rebecca Tickell, filmmaker and director of the documentary Common Ground. You can find streaming now on Amazon Prime.
Rebecca, thanks so much.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business App. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.